All right. Hello, folks. It is Wednesday, August 24th, and we're looking at NQ. Um, I've changed my screen layout once again. I'm always trying to decide what I need and what I don't need. And then every once in a while, I'll get a new idea and try it out. Sometimes those ideas don't work very well, sometimes they do. So, what I've decided on for the time being is actually a simplified um, view of like a just the essentials basically when it comes to the algos, and it's a mixture of the trade and perform algos, most of those, and then a few of my own that I've added. Um, and that one that you'll see on the layout on the 24 tick and the 32 tick, that's what that's what I need to see set up to actually trigger the trade. So if there's no trade on the 24 tick, I can't enter the trade. That's rule number one. I've had too many mistakes from taking trades on smaller time frames, so right now I'm waiting for a 24 tick entry to confirm. The other tick charts, like the 32 and the 80, these are more for analysis and not so much for triggering trades. But what we are finding is that when there's a potential trade setting up on the higher time frame, especially the 80, but also like the 40 or 32 or 36, whatever, anything higher than what you're actually looking for to enter on, the likelihood that your entry, I should say my entry, is gonna work out increases significantly once that higher time frame also triggers an entry. So, in other words, the higher the time frame, the more likely these valid entries, will actually play out on the lower time frame. So, as an example, like let's say this purple bar star here, this also had a diamond, but let's just focus on the star because we know that purple bar star down here at or below this lower blue line is usually a valid signal. And so this occurred on the 32 tick, right? Whereas over here, at the same time, we got on the 24 tick purple bar, and then this green outline with the aqua diamond, which is a new volume-based alert of that Simon introduced me to about a year ago, but we tabled it, and I decided to take a look at some of the older signals that I hadn't looked at for a while, and this was one of the ones that I relied on a lot last summer. When things slowed down, when we tabled it was when things started to get a little bit wild. It was just it was giving too many signals basically, and it was hard to decide whether or not we should go ahead and like stick with leaving it on the chart or not. We decided at that time to take it off the chart. We just had plenty of other signals that were working, giving us trades without the diamonds. But now, since it's summertime again, things have slowed down, and sometimes you'll get. I mean, if you look at the time here, like, this rotation didn't take very long, right? Like, I mean, it's basically lunchtime. This is Central Time, but it's basically almost lunchtime, and it took 20 minutes to come down here. So it's long, but it's not grueling pace wise. But you can look here from the top, which came out at like 12:50, let's say. That down rotation didn't end until 13:50, so 1:50. So this one took an hour, right? And in the summer, you basically have. I mean, it's kind of the same thing as trading late Globex. Early Globex is almost totally untradeable, but later Globex or any other slow period where you need to be able to decide whether or not you're patient enough at the moment to wait for a certain area to trade. because if you take every signal inside of here, even if it's valid, right? Because you have to wait an hour for this to play out. That's an hour of like your brain like mental energy that has to be spent just like even if it's not heavy energy, like it doesn't take a lot of processing, right? You don't have a lot of decision points, but there are multiple decision points within the hour, right? But it took an hour to move there. So if normally if it wasn't the summer and it wasn't lunchtime, you'd get one of these movements in maybe about 10 minutes, maybe 15, rarely 20 like this. This one I think took 20, 25. So it's even that was pretty slow, right? This one was pretty typical, about 10 minutes, and then this one took an hour. So it's if you got short here, even though like let's just say you saw the star, you thought, okay, lower high, I'm getting short, momentum's increasing. You're confirmed here with more bearish signals, and so there's no decision to make there. But then you get this continuation followed by a pretty significant retrace. And you can see here we have the sign of aggression, the star back to the upside. And so if all you see is this, if you ask me, if all you see is this, and you got short here, and you waited almost an hour to get your extension, which you hoped would be down here, I'm probably feeling pretty nervous when I go back to break even, because basically we got in here, right? Extended down and came back. I'm feeling pretty nervous at break even there, primarily because I've waited like 40 minutes in that trade, and shorts that take that long don't usually work out. But what you can see is if you just stuck with the plan and let it go, it did approach this level. You can see where the point of control is down here is your natural retest point, and that touched almost perfectly. So if you're aggressive, you can short this or this, but in my opinion, the reason why I'm using the diamonds is what the diamonds are reminding me is that there was basically saying that there was a lot of volume, more volume than expected on that bar. And now where the volume is in the rotation is going to change how you interpret that. But in general, when you get the diamonds that happen below the blue diamonds, or whatever color that is, aqua, if they occur below this blue line on the bottom, or if the previous bar's point of control, that little dash, and where this yellow line just connects those, oops, this way, right? This yellow line just connects these little dashes, which is the point of control of the bar. So if either the entire green one, the up bar with the diamond, or else the bar before it, if that point of control is below this blue line, usually you can get like some form of extension right away. It may only be 2 bars, right? But generally we'll get something. But the more useful thing for me is especially when the diamond bar is inside of the channel here, you generally will get a retest. So like you'll come down and sweep these stops down here. Sometimes you'll sweep these too, but then you'll have another opportunity to enter in this range. So if you think about it this way, once I see this, this one doesn't really count because this one I got in. I actually traded this. I got in this right away because it's underneath the blue, so it's totally fine, right? But let's look at this one. Now there's some nuance here depending on what's going on with momentum, but in general, I'm going to say that this point of control before the diamond and the actual point of control of the diamond bar itself were both inside the channel, right? So my expectation is that because that is, the star says aggression and the diamond says volume. Just think about it that way. That's all you need to know. The specifics don't really matter unless you're trying to like recreate the system, but you can just have it if you join the room or build your own, whatever. It doesn't have to be exactly the same. But the idea is we have aggression and volume, but it's happening inside the channel. And so on a very micro time frame, you can think about this like a high volume node when it's a diamond, right? And it's inside the channel. So what happens in high volume nodes? Well, you tend to get choppy action in the range, right? Which, like I said, I've highlighted here.
sorry, the colors are kind of similar, but you'll get choppy action inside the range. And if it's bullish, when you get underneath the high volume node, if we get a response from buyers, and especially if that response is aggressive, right, which would produce an algo in this case, this entry is often much better than this entry. That's the gist, right? When the volume comes in way down underneath this channel, well, then that's still, the rule still applies. You can still take that area and say, if I see a sign of aggression in the future in that area, I'll go ahead and buy it. But realize that then your stop has to go down here, right? So you're pulling at a higher time frame once you've exited the area. But when it happens outside this channel, there's a good chance that you'll actually get an immediate extension to about the middle of the channel. Now the problem is that the middle of the channel might not be very far away. See that? Like this one, it's like technically a little bit in the channel, and it extends to the middle of the channel, but this isn't very much reward for your risk. And then this one just straight up stops, right? It just doesn't work. It just doesn't extend, because sometimes they don't. The reason is because momentum is so strong that despite the heavy volume and the volume shift, which is the green background, we got a volume shift and increase in volume. It didn't matter because there were so many trapped buyers back here, and that's actually why I measured the volume profile here, is so that I knew that's how I knew not to take this one. I skipped this one as well, because once you've trapped these buyers up here and gotten underneath the associated apex, I'll see this little purple flaggy looking sideways triangle. That's the apex of this rotation, right? Up. So once we trapped these aggressive traders and we got underneath the apex that produced that wave or that rotation, once we got under it, buy signals down here are not going to be very good. Our best case scenario is to get back up to here, because that's where everyone got trapped, and so that would be your target. You didn't even reach it, right? But the problem is that the midpoint, the midpoint of that channel got in our way. See that? And that's always your first target if you're looking for retracements, is the middle of the channel. Once you've gotten out of the channel, there's a good chance you test the middle of the channel, and then this is where the momentum shorts set up. Pink bar, star, see ya. Right? And now knowing when to get out of the momentum trade, that was the challenge. So like here, this guy's trapped potentially, right? So if we get like this, if you thought this was really bullish and there was time left on the clock, this speed bar diamond here, this white diamond, is often a sign that bulls are like trying to extend. But look at where this star is compared to previous price action, and like you're right back into that zone. See that? We're right there. So it doesn't mean it can't work. It's just that you have to realize that if you're trading momentum here to the bull side, to the buy side, we've not actually tested into this. Like, look at this sell volume here, right? That first drop was severe on like angle. We came back and rejected it, which confirms that there's trapped buyers up here. So the idea that we just scoot right through it, like, it can happen. It definitely does happen. But usually what you get is a fake breakout and then like a 50% retrace. But it depends on momentum, right? And you have to decide like how aggressive of a trader you are. Personally, I'm pretty aggressive, but not in the last 30 minutes. Because while this could certainly squeeze right up to the voodoo range level at 12,996.75, and it wouldn't surprise me at all, because I mean, we got the signal, right? The algo giving us like the diamonds and the stars and all that, it doesn't know where we are on the chart. It's not saying buy here and you'll have a profitable trade. It's saying there's aggression here on the footprint. So if you were looking for a long here, this is your trigger, right? And so your question of, am I looking for a long here, depends on where I am on the chart. And then you can also look at higher time frames to get confirmation. So like this is just the same chart on a higher time frame. And so I can look for similar entry possibilities here. But for instance, a triangle up, a white triangle up on a pink bar, if this closes pink, could actually be vulnerable to a reversal. So that would be a reason not to take this trade. Now, they don't always create reversals, but when we get behind them, they're very easy to trap. So if I would have bought this and I see this come right after it, the triangle on the pink bar, I'm actually taking profits right now. Like and it doesn't look like a lot, right? But if you know that 50% of the time once you get this, that you're gonna get some kind of retracement and it's gonna go underneath your buy order, like your buy point, like why not take like the 8 points? I'm not saying you have to take the whole thing off, but like why not like shave off some of that risk and just like pocket the difference? Because then when they come back down here, we're gonna get some information. So that's that. You know, it doesn't look like a lot, and that's one reason why momentum trades are so challenging, is that you need to ahead of time decide where you're willing to do business. You can't just scalp back and forth with the signals. You'd have to know this is a great place to get long. So like if we got this same exact setup down here, great, right? No problem. Bullish is, or momentum starting to get bullish. We got lots of room to go buy it, right? But I'm personally not thrilled about buying momentum into resistance. I would rather wait to see how they treat that, and then buy the pullback if I had time. But no, right now we don't. So I'm not going to take the trade, but it, just to show you that it does signal, like the momentum signals are there. It's just that you have to remember that the algo does not know where you are on the chart. So like what you're seeing now is like the market responding to that aggression that came in here, and they're trying to trap this aggressive trader on this red bar that got the star. The guys who sold here are trying to turn the market around at resistance, and the guys who bought right after them are trying to trap those aggressive sellers. So that's all the algo is telling me, is that there's something on the footprint and the DOM, on the time and sales, on the the current open book, right? It's looking at all those things, and it's saying on a very micro order flow level, here there was an aggressive seller, and immediately after it is aggressive buyer. And when you get that kind of an action, if the momentum is strong enough, it generally results in some sort of an extension. But that extension only usually goes to resistance. And then whether or not it goes past resistance is going to depend on what happened previously and what the higher time frame is looking like. So on my highest time frame chart, the 80 tick, which would be pretty hard to trade off of because your stops would be huge. If you look at the size of these bars, like this one goes from, it's like kind of an average or large bar, goes from 72 to 36. So way too big. Like even 40 points is way too much. But like anything over that really is like, it's just too much risk, even on the micro contract for me to take. So like if I wanted to buy, see this is the same signal, star down, white diamond up, see that? So that looks like a great place to buy, but you don't want to have your stop have to be, in this case it would be, let's say 55 to 90, right? So you got confirmed at 90 that this closed with the diamond, but your stop has to go under 50. So you're looking at more than a 40 point stop, which is just too much risk, unless you really thought that there's a good chance that we were going to do exactly this. Now, if you have a target up here, then like I'll take this. I took it with calls, for instance. Like that's okay. If you have a way to do it, you can buy calls here. But with futures, it's pretty tough, unless you just want to trade like one micro on and you have like a pretty good size account and you don't mind taking 40 point stops plus, like, and that's okay if you do. If that's what you want to do. That's cool. But the primary reason for me even looking at that chart, let me just make sure I can see this too. Sorry, the neighbors are doing some yard work. They're kind of noisy. My primary reason for having this up isn't so that I can like see that and put my stop down here and buy it here and trade this time frame, it's so when I get a signal here to buy, if I look up here and I see the potential, because we get warnings that this might close like this if it closes bullish even before it closes, like even when the bar is like right here, you know, at like 70, we already know that this is never going to change. They've already got the aggressive seller at support on the voodoo range level. That we already know, right? And now they're moving upwards, and we know that if they close the bar here, we'd get a diamond. So we would see the diamond, we just wouldn't be sure that it was going to print, because it only prints and never disappears once the bar closes. So like you'll see the same sort of thing here, where things can change until the bar closes. Once the bar closes, those signals stay the same, right? So if we slide back to what we were seeing on the tradable chart when this happened, which was a long time ago, but so it was down here at this low, and so here I get a green bar outside of this blue line, right, which I already know is a pretty good entry most of the time, which is why I took the trade. And so when that happened, and now remember this is at 60, so we would not have known this was going to close with a trigger, but it would have been right here at the voodoo range level, and I'd see that we potentially trapped that bearish aggressor, that star. And so then I'd know, well, hey, if I can get in here, there's actually a chance I retrace not just this rotation, but this entire thing, as long as this prints. So once that prints, which occurs here, now I know don't short. So even though I get the star here, because I see that we got a momentum entry here, and remember this is only 897, so we don't know that this one closed bullish, but we know that this one closed bullish, right? So it looks like this, but we see a little bit of a tail here. I can't tell Seer tried to do it without doing a review, but you can see that once we get that star, I know that as long as I'm bullish down here, I can short it if I want to scalp, but I can hold these calls, right? When I buy the calls down there, I can just hold it, because I know most of the time, like that, this signal, this pattern plays out, and once this is closed, that low is pretty secure, and so then those calls, I don't have to worry about all this stuff unless I'm trading futures. But with the calls, I can just hold them, you know, and I don't have to worry about it. So that's how I use the higher time frames to actually make decisions. Now it can come back on you, right? It doesn't mean it's gonna work. Like they still stop. You have to know how to manage trade. But I think what took me a long time to figure out was, when do I just blindly trade the signals? Like don't even look at anything else and just say, if it's a down signal, go short, and if it's an up signal, go long, right? Like when do I do that versus when do I, which the answer is you only do that when the location is unknown, a location that you want to be trading in. So for instance, like if I knew that I wanted to be short here and I wanted to be long down here, well, yeah, then short these and long these, right? Then that's fine. Sorry, I live by an Air Force base. It gets noisy here. In this time of day, they like to fly the jets. But the key is, once you're no longer rotating from one like inflection point to the next, and instead you've got like unidirectional momentum, you can no longer just blindly short this, right? I mean, you could, but you're gonna lose a lot. You're gonna lose a lot, because here there's a big difference between the momentum, like at that location here. This is basically the same location laterally, right? Huge difference in momentum, right? Like this one might not have worked because you were so far underneath the channel anyway, so it would be natural to go back to the midpoint. But this one's pretty good, and this one's okay, right? But now, even though you're way up here on the band, but at the same time now you've got the momentum has completely changed. So that's why I find the higher time frames help me, because once I see this pattern that I know is bullish, right? Especially when it's at location, even though I might not be able to trade it with futures because the stop would be so huge, and then so I can just buy calls and then also stop shorting this, right? Because it's not going to go here very often. Like, this is still a good trade. I'm not saying that's not a good trade. And my coach would disagree with me on this a little bit. His style is a little more aggressive. He would say, buy this, short this, buy this, short this, take one stop. And to be fair, he's not wrong, right? That's like his win rate might be slightly lower, but his profit and loss, his P&Ls would be slightly better because he'd get multiple like hacks at this range and potentially get a big move. But what I'm saying is, if the only reason to get short here really is because you might take this low out, right? And I'm not really looking for just going back to this midpoint, or like this level or this level like that. If that wouldn't be a very profitable trade for me from here to here, like any bigger than this, why risk it when I am confident that this low back here, the 907 low from earlier, is probably going to hold on the first test? Like, why even do it? Just buy this and then know to ignore this one. Now, like I said, then the question is, do I buy this? Like add. And that's straight up momentum trading that my coach tells me I shouldn't do. So I'm trying not to do it as much. But there are still opportunities that I do try, right? But I know I certainly try to, like after the day, when I do my review, I look for these, especially the ones that don't work, so that it can so I can be real with myself about how often they work. So now you can see why I would have taken profits hopefully now on the pink bar with the white triangle. They just don't continue very often when they're so high on the radar here. The channel, whatever you want to call this, the blue like outline, right? Like that band of lines or that channel is really helpful. And yeah, when you get this like weak push up, because the pink is basically saying price is going up, but sellers are pulling their orders, and that's a big reason why it's going up. And then you get a triangle on it, which is basically a sign of aggression that's not at the apex. Like there's no way this can be an apex of a rotation like this, right? It can't be an apex, but there's still an aggressor here. So it's like they're late to the party, right? They didn't buy this one, so they aggressively bought this one as sellers pulled their orders. Like all you have to do is beat that. Like this is a much better short because of this. This triangle up on a pink bar makes this star a much better short. So like this one, not so great. It's looking bullish. This one has a chance to work. This one, almost no chance, in my opinion. If you're saying work is like, bring it back to support. If all you need, if you're trading like Simon does, and all you need is 8 points, and with your 30 contracts, you do just fine. Do that. Just take every one, right? But I'm not trading 30 contracts. I have a hard time getting rid of trades at like 8, 9, 10 points. I'll take profit there to protect myself, but I'm really trading so I can get a couple stretches. I want those runners to do most of the work. And I just want to make sure that the entries I do take are going to work more often than they don't. So it's a little bit of a hybrid system for me, whereas my coach is pure mean reversion. He finds the highest win rate trades, 65% plus, figures out how far those usually stretch at that win rate, and like where that there's a point where if you hold it any longer, the likelihood of it extending is lower, and so he'll just exit. He'll just mark it out, and the result is a ton of really like great days. He can string together multiple days in a row of profits when the market basically did nothing. Whereas like all my like hybrid style will like get 15 here, give back 8, and then get 20 here, and like I don't know how much it gives back here or not, but sometimes my entry here not only gives me the 20 or whatever that he got, but then I don't take this stop and I hold and make it a 50-point trade or a 70-point trade or more. So the days where we stretch a little bit, like I get a better what's it called, not P&L because I'm trading such small size compared to him, but like points, like dollars per point or whatever you want to say. I don't know what the right ratio is, but it's like the more the market moves, the harder it is for well, I shouldn't say it quite that way. If the market's going only one direction, he's not very active, right? Whereas if the market's only going one direction for me, I might be less active than on a balanced day, but I'm still focused on catching the big trades. I haven't totally given up on momentum. I'm trying to be very selective about when I do it, and one way to do that is just to keep an eye on these higher time frames and only trade in the direction that they're trading. So like here, like I said, I've got a lot more signals here on purpose because I'm not looking at this constantly, right? I'm literally seeing like these take 40 or 50 points to print. So like I'm watching this, making decisions, and then when I see a setup here, I look here and say real quick, is there any reason why I shouldn't do this, right? So like if I saw this star, I'm like, oh, this should be a short, right? And then I'd quickly look here and say, well, is there any reason why I'd think that we wouldn't go very far? And when I saw this pattern down here, I'd be like, well, I doubt we're gonna get past this. So am I okay with this? Like, and bounce off the voodoo range level, then fine, right? But if I think I'm gonna go down here, probably not. Especially once you get this hasn't printed yet, but if we close bullish here with this blue cross up here, generally what happens is then you get a dip and a bounce. But we'll see. It would have to close up here first. These blue dots here are divergence. It's when they come up here, like you need to get underneath all of them to reverse. So we need to close candles down here, which means one candle closing, not a big deal. Two candles closing, now the bears might have some momentum, right? So, but remember, two candles on this would bring us all the way down to like 62.50. So now look at like the smaller time frame, 62.50 is way down here, right? So if you're okay with a short from here to here and you are satisfied with that, that is possible, right? But the likelihood is low because of the heavy momentum. So in my opinion, that's how I would usually interpret that. Is like momentum's picking up to the upside. They probably do need a retrace, but it's definitely not going to go any further than I shouldn't say definitely. I don't expect that it would go any further than this, and it rarely just goes there in a straight line, right? So if we bounce around up here, down, up, down, up, down, up, down, right, and eventually we get near this, and then we bounce, like that's totally possible. But as long as this continues to make higher lows and higher highs, and when it prints strong patterns like this and actually gives extensions, as long as that keeps happening, there is no reason for me to think we're going a lot lower. I mean, obviously there's only 3 minutes left, so we're not going anywhere during the RTH. But I'm just saying, when I see that momentum there, I have to be, like I said, I've got to check myself when it comes to how bearish I am, and it's because I love taking shorts, but I want them to work more often than they don't, and there's a lot of times where my brain sees the potential of this huge rip lower, and it's just not going to happen. And so like if I say like, okay, I could see it going to 60 like that, right? And I'm like, that's a pretty big move. Like, I'd take a 70-point trade any day. So I'm just going to short this. And then it comes down here and it bounces here. And I end up taking a break-even trade, or like, maybe I get half off and then it trails out the rest. Like, I have to ask myself, like, was it worth it to take this trade and get a full stop and this trade and to get 1-to-1, and how often am I really going to get down here, like in reality? That's the answer you have to. That's the question you have to answer before you decide whether or not you're going to be taking trades on both sides of the market. And like I said, I might be wrong here. Like this might be the very last higher low we have, right? Like, and that's fine. Like you're going to be wrong, but you need to have a way to make decisions. You don't have to be perfect. You just need to process. So it's okay if it goes lower. I'll just look for trades down there, right? My calls will be toast most likely, but it's yeah. I'm more interested in staying in a clear state of mind with a plan and like structure around my plan, that I'm okay missing some trades if I just don't have the vision that it can really extend. And that, like I said, that is a personal preference, and anybody who disagrees with me on that is like I know some excellent traders who completely disagree with me there, right? So do you do what makes sense to you, and if and especially if missing a trade like this end of day short, like that, because we got the signal, right? We got pink bar star down, so like the signal's there. There's no reason to say you can't take it. The question is do you want to risk a full stop on it? And then I guess the alternative there is, if you're not sure, like maybe you have like some mitigating circumstances, like it's the end of the day. If you normally trade 6 contracts, maybe you take it with 2, and learn from that. And I think that's a good idea as long as you're in the development phase of your plan. There's a lot of things where on paper they sound really good, but once you put them in practice, like they don't work out the way you expected. Like if you miss this trade, this short, and it's like early in the day, right? And you miss this trade, if you're now going to be like hyper bearish and like short the next bar or whatever, like if you're going to chase it, or if you're going to somehow get tilted from that and just make bad decisions, if you're not going to be able to follow your plan, if you don't take this trade, but you're not bothered at all if it just stops out because you gain some information that you shouldn't be shorting or whatever, like if you're able to handle that stop way easier than you are able to handle missing out on a 20-point trade, then just take them all, because most of them will work as long as if you've got a back-tested system, you should have setups that work more often than they don't. And I know pink bar star up here works way more often than it doesn't, right? I know for me, if I have a inkling that we're going in one direction or the other and we're not just balancing, and I trade against that, there's a way higher chance that I'm going to start tilting and just not follow any rules when that doesn't work out my way, right? So if I think we're probably going higher, I'm just going to skip that trade most of the time. I'm going to skip it almost every day when it's the end of the day. But even if I just thought, I think we're probably eventually going higher, I'll just stop taking the shorts. So yeah, that's just my own soapbox. If anybody has any questions along the way, let me know. We're going to do a review of the day and see how things looked on the different time frames on the algo. First, let's take a quick look at the candlestick chart and just kind of get oriented here with what we should be looking at. Hold on, let me find NQ. Okay. So I probably got more lines on here than I need, but let's just take a quick peek here. So this is the 30-minute chart. The day opened here, right? So overnight, we came back and tested 12,907.25, the voodoo range level. Notice that level was negotiated all day long, but like this 12,952 was defended pretty well. But we did get one 30-minute close over it, but I don't think we got like a 2-hour close. No 2-hour close. See that? So like negotiated, but bears clearly stood their ground there. And what's crazy is that you can get these 1.5 I was gonna say standard deviation, but 1.5 ranges. You can get these pushes and retraces without even like there was economic news there, but that's yesterday. But that's it, right? Like it wasn't any. I guess that's news is news, but you saw that big test here, and when you see stuff like this, where it's like, see how, okay, what am I trying to say? All right, so I'm looking for range, expansion, and contraction, right? That's always something subconsciously I'm keeping an eye out for. So here, range was one, oh, it shouldn't be purple, sorry. 1 VR, right? I'm estimating. We're gonna make it blue. So, yeah, here we were staying, give or take, 1 VR, right? Give or take. Whenever we got beyond 1 VR, we would get some reactions, especially beyond 1.5, right? So that was just like that consolidation period. Then look what happens here. We expanded, right? And we get, now rather than just 1, we got 2.5. And we tried for 3 and failed. And then this one went 1, 2.5 back, right? From, if I started about here, 1, 2.5, and then a little more, right? So almost 3, really. If you count from here, it's like 3. If we actually measured it, it's probably 3 times the Luda range. So that right there is range expansion. Once you see that, assume that stop taking trades that are in the middle of the range and assume that the best trades are going to be on the edges after liquidity gets taken, right? I've got a whole video on this if you don't know what I'm talking about, but I call it expanding negotiation, because generally you negotiate 1 or 2 of these lines, usually rotate around one of them, but sometimes the range like encapsulates multiple ones. But so once you identify the level that they're negotiating, which is 12,907, once you identify that, you do not take trades anywhere near here. None of this. From this midpoint to this midpoint, out. Don't even touch it, right? Like just ignore every signal you can. And then instead, wait for a higher low to be put in, and then to get above a high or below a low, and then reverse, right? So I mean, we could look at the algo and find the trades, but I can do it quick if you want. Just let me know. But basically, you just wait for this. You don't know it's there until here, right? When it closes. So there's literally nothing to do as it's falling. Like, I'm not a proponent of shorting this. That's what I'm saying. And I realize it's a profitable trade, right? Like, almost twice. I just don't do it. I try not to do it. Sometimes I will, but I try not to. I don't want to trade momentum when it's doing this, because the stops just hurt really bad, because you tend to get stopped out right here and right here, right? And it just like runs the other way. Psychologically, it's really hard on me, and I just accept that I will miss the breakout and I will trade the mean reversion, but I won't take the first one here. I won't take that first sign of aggression. I'll wait till that bar that had the first sign of aggression that created this apex, I'm going to wait till they trade beyond him, and then another player comes in. So like, if you guys have seen Squid Games, it's a little bit, I hate to give it away if you haven't. Anybody not want me to give this analogy? There, you know, when you're playing a game, this is going to be considered a game too, with other players where their decisions are influencing your results, you have to think about like how to position yourself to exploit their decisions. So it's kind of like the bridge, right? I won't give too much away if you haven't seen it, but the bridge game, the strategy, the winning strategy is not to make a decision until somebody else makes a bad decision, right? So once this guy makes a bad decision and gets stopped out, now I'm looking for longs. The mistake here, the big mistake, is waiting for this guy to get stopped out and shorting it at the open, right here. And a lot of people did that, and I get it, because look, if all you see is this, right? Like, everyone's got their eye on this already. Like, your eye just goes immediately to this bar. It goes immediately. It should. This makes sense. For your eye to go immediately to this bar, and you're like, I think even my coach said this. If it comes down here, I'm going to look for, signs of strength. But until then, it's bearish, right? He didn't short the low. That's definitely not his style. But I know that he was looking for longs lower, like everybody else, right? And so you start thinking that when we try to bounce a little bit and then we pass below, you think, oh, okay, well, one time coming down, I'll just short the low and try to get long down here. Well, everybody did that. Look at the volume, right? And so the trade instead is to actually long down here. And then up here, it's the exact same thing, right? Everyone's like, I don't want to buy unless I know it's broken out. And you had this like high, this overnight high, right? And then London got over that. And then the London high got broken in the first 30 minutes. So everybody who shorted this, that's their same strategy, buys this. I don't want to do that. I want to short this as soon as this guy gets stopped out. So he gets, whoops, sorry, I went too far. He got stopped out right here. Now I'm looking for shorts, right? So if I get short right there on the way back down, cool beans, right? I can do it here or here, I don't care, but I get all the way down here. Now, I would have wanted to long down here preferably until I see this candle, and then you get someone shorting below it. Well, now I can technically long this one, right? Better would be to wait for this to get taken out, which didn't happen, and that's fine. They just switched it into more. Here, I'll show you. So now they're contracting the range again. See that? They've extended the range. Now they're contracting the range again. They're trying to, just like they did right here. On a smaller time frame, it's range contraction and then range expansion. You want to do this strategy in range expansion periods, right? This is when you do it. This is when you do it. This is when you do it. When everyone else is thinking we're one-sided momentum, recognize that they're all wrong as soon as that momentum reverses. So that's when you take those trades, right? You don't take them in here. You don't do anything in here, in my opinion. But then, so that's how we closed down here in the middle of all this negotiation. We closed down here. So it was basically a neutral day, but I said that it was slightly bullish because we didn't trade below this. And I personally thought everyone was going to buy it if it did. So what I wanted to do is buy it if it gets down there, right? So it got down there, and you can see that the line is, the low is down here. And so overnight we couldn't reach it. And we developed a purple pivot here overnight as the range contracted and volume contracted. And then we got a breakout over this level. So someone bought this, which is what we expected, right? And then they tried to get back up to this Future range level to collect liquidity up here, and they rejected right at the Future range level. So as soon as you see stuff like this, you know algos are primarily the ones trading. And that makes sense. It's 5 in the morning, right? So algos are trading here and here. This one may be some humans, right? This is clearly algo trading. And they're just defending that level because they think they can get back here. It's a very simple program that just sells one and buys the other, as far as I can tell. I didn't write it, but I pretty much cracked how it works. So yeah, they come down here and test below this low. And so if you're paying attention, you'll see that we've now entered expansion again. See how this low and this high have both now been beat? We've gotten behind it, and the result of that was a retracement back into the range, right? So just like we saw here, that is the hint. If you didn't know that you wanted to get long here with a stop down here, then the hint is this. And once you see that, you should be thinking dip should be bought. And there's your dip right on the open, right? So we have to remember that when an opportunity is really good, you're not going to get a lot of time or chances to execute it. And that goes for every single time frame. So if you thought this was a good buy, which I did, we need to remember that as soon as we test into that area, we don't want to wait for the fourth setup or the sixth setup or wait for someone to get stopped out and then buy back. No, you just wait for the setup and buy it when it sets up, right? So we're gonna take a note of that, take a look at that, and that was let's say 18,850, right? A little bit above 50. So remind me to take a look at that. Then, not surprisingly, we go above this high, okay, and I took a trade here to the short side and got stopped, and hopefully you can kind of see why. I was looking at this, and that's my strategy as long as we're expanding in both directions. I was under the impression we were expanding in both directions potentially, and took the short as soon as we saw aggression coming back down. I also had a purple pivot here, and I thought it was a pretty good chance that we renegotiate this. I was pretty sure that we were done down here. And that read probably should have kept me out of this short, but I thought we were probably going to go one more time, come back in, and then try to take this low, or maybe get below it very quickly and then bounce. But that's not how it worked. It just exploded, and that's fine. Like, that's how it goes. This trade did eventually work. I was a little bit anxious with it, and I took it a little early, and then but I did get calls on the dip, because once I figured out what was going on, and this turned around right at the voodoo range level. See that 07? I'll show you that too. It literally turned around right at the voodoo range level, and I'm like, okay, well, we held this, and the algos that were selling that level are now buying it exactly in the same spot. So I don't know if it's going to hold right now. It might trade underneath it, so I don't want to buy it with futures, but I'll go ahead and buy calls, right? And I held those calls because even though we came down into it, and this did not surprise me at all, that once we spiked, I could have taken some profit here, and had I been trading futures, I would have definitely sold 12,996.75. In fact, I believe I caught a long in here somewhere, and I'll double check where that was. I don't know if it was this one or this one, but it might have been this one. And I did take profit into a voodoo range level, like I usually do. But when we got this pullback, and it didn't take out this low, I was pretty confident that we were in good shape into the close. Notice now that we've expanded, they're trying to contract again, right? But usually contractions happen between voodoo range levels. See that? If I've drawn them right, the contractions occur between voodoo range levels, not on top of them, over back and forth. So when we closed over this and then closed under it, it's a little bit of a concern from to think that this up angle is probably too steep, right? So this trend is too steep, most likely, is what that means. I'm not a trend line trader, but I'm just saying when you see contraction at a voodoo range level, it probably means that we need to renegotiate a bit, because that's not where it should be happening. Now, it doesn't mean it will go all the way down, but what I bet will happen is that we come back into here, and then after that, we come back up and we start developing back in this range again, or we just take off. Totally possible as well. Because then what this is an attempt to consolidate in here, right? That just didn't hold. And that makes a ton of sense to me. Technically, we could go all the way down too, obviously, but I don't have that read personally. So note the purple pivot here. It works as a trade entry intraday, right? But it's not a brick wall. You can get beyond it. And notice here they're reacting off of it again, but you can't just leave limit orders there, to sell at them. It's just not a good way to trade it. This one down here had one touch. It would not be unusual to get a second touch. So if we get, for instance, that same action here in reverse, and then a bounce right off of this, totally makes sense to me. But I actually think we just go higher, to be completely honest. So let's look at the algo, and you can see if you agree with me on that read. Like I said, having watched the thing all day, my bias is definitely the upside, and I'll show you why. So 24 ticks, so we're going to take the 24 all the way back without really trying to look too closely here. I'm not going to do the whole overnight, but I want to show you the pre-market real quick. We won't. It's going to take too long to do the overnight. But this is the open, the Globex open. So see how the channel, the bands are like dropping hard, right? So we should know not to just auto buy that. They come down, they test this low, right? So that's the low overnight. And then pre-market, they came back up to the POC. The blue line here is the like multi-day running POC over about the last 3 days, 72 hours, 24-hour days. So 72-hour POC. Expect that to get reactions when you're approaching it from a gap and to trade choppy around it when you're sitting there in a balanced day. It's not a great place to trade if the setups, if you're seeing action and development in here. If you're developing volume in like back and forth, it's not a good place to trade. It's a great place to trade when you see the rejection like that. That is a great short, right? Because you're coming at it from so low and you're approaching it for the very first time. Now, once we get back up there, I would not take it again. It's got to be that first like rejection. So pre-market, we don't usually trade the open, but we did have a signal here to go long at the open. These green bars, and especially when they have a diamond, are usually buyable as long as you're underneath this blue line. When they're touching the blue line, it's like a little bit suspicious. But that's really all you need as long as you're below the line. Once you're on the line, or definitely up here, like where you're touching the line, but not like the POC is maybe right here, right? Once it gets a little like questionable whether or not it's bullish, you want to see either a trapped aggressive trader like this, or a purple bar, or a triangle down right below it, preferably. You can technically get good trades with them if the purple bar is here, 2 bars behind, as long as the range is tight. But the best odds trades are either underneath this blue line, or when the very previous bar had an aggressor at support, or is purple. Not when it comes to longs, that's as good as it gets. So that is a good, it's got 2 different reasons to be aggressive there. Volume is developing higher. We're absorbing sellers in the area that were aggressive, and we have a speed bar diamond. So this suggests that the move from here to here was really fast. Now, keep in mind, this is the open. So that's kind of expected. So I'm kind of ignoring the white diamond. The algo doesn't know it's the open. You know, like it's not thinking about the time of day. It's just like, hey, that bar formed really fast, right? Well, I know why it formed really fast, dumbass, right? It's the open. So, but notice there was a little bit of a gap, and so that gap got filled. So if you were quick and you hit that on the gap fill, and as soon as it starts turning out around, that'd be a hell of a trade. Now here, we talked, if you were here earlier, we talked about this pink bar having a white triangle, and that can be kind of a problem. It's only a problem when it's up here at the top of the rotation. When they happen down here at the bottom of the channel, this is actually very bullish, because again, it's a sign. The sign is the same, it's just how you interpret it. The sellers are pulling their orders on the order book is what that's saying. And price is going up. And then the white triangle is saying someone's being aggressive here, even though it's not down here at the low. That someone's like adding to their trade, basically. I mean, they might be entering for the first time. It's like a sign of FOMO, right? That's what you can think of the triangles. So you're getting FOMO at support, and sellers are pulling out their orders. That is the potential for a squeeze when it happens there. When that same exact signal happens up here, anybody who gets trapped buying it aggressively can get steamrolled, right? So pink bar, star, way above the blue line. All you need to do is get under that guy, and it can roll over. But when it's down here, it's actually bullish. So that's all you need, right? Back up to the voodoo range level, and I'm done with the trade. Because it's the open. Okay, so this one didn't set up. It was pink bar and then just blank bar, and it's in the middle of the channel, so I just leave that alone. It does technically go lower. Here's another example. That green bar, I can't see if it's right on the voodoo range level, so I can't see if it's got another algo in the middle, but it doesn't matter. It's a green bar below the channel. That is a buy. Just a green bar there. So see, like that right there is a great trade. It's almost hit there, right? Did it hit it? I can't tell. I don't want to go forward. I wanted to see it spike towards the voodoo range level, but I probably honestly would have taken it here. I would have taken it off here when I see that sign of aggression, unless I had a reason to think we were going straight up. So this one is not touching the blue line, right? So you need more evidence. I've got this blue underline to indicate that the channel has divergence. In other words, we're making a lower low on the channel, or a higher low on the channel, but a lower low on price, or else vice versa. So in this case, it's seeing this, I believe, that this low on the channel is lower than this low. So the channel itself is rising, but price from here to here is falling. That's what it's noticing. And like I said, it's something I'm testing out. I'm not using it as an entry, but I'm considering using it in the same way as I use purple bars before like green bars, or purple bars before stars, or pink bars before stars. See how like this pink bar is only 2 bars away, but it's in the same range as this bar. So this pink bar being 2 away is the same exact thing as having it be here. It's in the range of the back of this bar, right? So this is divergence in the range of the back of this bar, right? But this one would not count because it's not in the range of the back of the, what am I trying to say? The wick of the bar, right? It's way up here. But when this one has divergence, that's actually helpful. So like I didn't take it, it was too early for me, but I sort of wish I did, because I want to learn to take that trade. I think it's good, especially when it happens down here, but I think it's okay to take that trade more often than not. So then we get pink bar star, but with the diamond, and it's inside the channel. I'm not shorting this, but if it comes back up and takes it out and then goes down again, I will short those. So see how this comes right back on itself? That's what usually happens when you have this pink diamond and it's inside the channel, because it's high volume in a high volume node. So yeah, so this one never sets up short again until here, and so that makes this a really good short because it had the volume build here that got stopped out and they come back. So that's definitely shortable, and you get a nice little scalp. Okay, then you've got another one. Like I said, I mean, you could just if you think it's balanced, you've got plenty of opportunities to make a pretty good day, right? Already. And none of these actually stopped, which is kind of cool. Unless you took this one, but I know better than to take that inside the channel. I will take them if they're way up here. I won't if they're in the channel. I will wait for the higher odds trade, which happens up here. So this one, purple bar, diamond, so exact same situation here, right? We're well inside the channel. It looks like it's bullish, right? So I want to be getting long, but when I've got all the volume on this one bar, and we're inside of this like standard deviation range or whatever it's called, the channel, I know that there's a good likelihood that we're going to trade back and forth. We're going to chop around in this range. So what I really want to do is I want to see what happens when they get under it. If they get under it and they come right back with a sign of aggression like this, or a star, a white star, then I can buy it. If they just fall away, well then I'll just skip it. And if they just run higher, I miss it, right? In this case, they just run higher and I miss it. And and I'm okay with that, right? If you're not okay with that, you need to sell this one and buy this one. And like I said, that's the way my coach trades, and I think it's totally fine, just not my style. This one is pink bar before, two before a star, and then but it does have the diamond on it. It's negligible whether or not you want to say this is inside or outside. What I generally look at is I look at the pink bar. This one also has divergence, so the dash. I look at the pink bar and I see if the POC is outside of the channel. In this case, it is, so that is an okay short. I took this trade, and it was a good one. So I said good because it was the POC was outside, right? So I was up on the day. It was right at 9 o'clock Central. So right when I can start taking trades about 45 after, like 15 minutes into the day, I can start taking trades. So like these are both valid. The good ones are valid here, and this one I just did not take, especially early in the day. I'm not going to take any chances of like going red on the day early. It tends to get me like fucked up in the head. Notice here we have purple bar with a triangle at the top. So this is the exact inverse of this, right? These are sellers pulling their orders. These are buyers pulling their orders. And so again, when you get the purple bar down at the bottom, that's a problem. When it's way at the top, the purple bar is good. Exact opposite for pink. So once you learn these signals, it becomes really easy to see when you're learning them, it's like drinking out of a fire hose. It's crazy because there's so many colors and shit. But once you just learn them one at a time, and you just only look at longs and you find purple bar star, purple bar green bar, purple bar diamond, right? And that's all you do. Once you get that, then you can add the short side, and eventually it's just second nature. So here, look at how the purple bar, the POC, is right on the line of the blue bar, right? And then the diamond bar that's also green is inside of the channel. So this was really tough for me. I'm supposed to take it when it's inside the channel and not take it right away when it's outside the channel. So I skipped this because it was at the channel and I didn't know what to do, and it paid. So I might have to adjust that it's okay if it's on the channel and not inside. But the key is have a reason, right? Like know why you take the trade or don't take the trade. My coach took the trade and it paid great, right? So again, another reason, if you would just take every signal, you'd be short, paid, long paid, short stopped, short paid, long paid, short paid, long paid, and then here short stopped, right? So you're doing better than I am if you take every trade, but you're also working a lot harder. And the risk of seeing this trade go against you, if that keeps you from taking this one, don't take this one. Because that's what I was doing. I would take the stop and I'd be, fuck, it's bullish, and then I'd miss this good trade. Be like, oh, I guess it's bearish, and then I'd miss this, right? And then I'd get this one. But it's like, you have to have rules that actually get you in the market, but that like help your psychology. That's what really matters. And it's going to be different for everybody. So, but yeah, I like this trade. I just didn't take it because this POC was right on the line. So one tick higher, I would have taken it. I didn't. So I have to do some research. I just never even considered the fact that it might sit right at the line when I did my plan. And like I said, as a disciplined trader who trades a system, the measurement of whether or not I had a good day is whether or not I followed my rules. So I'm not saying I never break them. I do, like daily. But had I broken the rule here and taken this trade, what I probably would have ended up doing is getting out break even right here. Because I would have recognized that I broke the rule and I really shouldn't hold it, right? Because it's not a valid trade for me. But seeing that it actually works out, it makes me want to go back and look and see, maybe I can take it if it's on or in, right? And in that case, I could just hold it. But anyway, this is a good trade. See how the pink bar is within the range of this bar. So this is a fine short that I took, and it stopped. I don't see anything wrong with it. My coach took it too, and I think it's fine. It just barely stopped. It missed my my take profit target by a small amount, and it just stopped. So the other thing we were looking at here is this was the high of the day. So in the room, I don't know if anybody from the room is here, but what Simon was doing is he was looking at this. The reason he took this and I didn't, I took an earlier one, but not this one, is the POC of this move up is right here. And you have a star that prints like touching that POC. So the thinking is, if this is the high, right, all the volume going up was developed on this bar here. So as long as we can get sellers showing up below that bar, we should go lower. That's the thinking, right? That's the theory. And it works a lot, right? A lot. Sometimes you need 2 tries, right? And it just like, sometimes you just need to try it twice. Sometimes it just doesn't work because it's not the high, right? But the reason we all thought it was the high is because this played out. And when you see these aggressive traders get paid without having to get behind them, that aggressive trader getting paid usually means they defend their position. Usually. When it's at the highs. That doesn't happen down here, right? But when it's at the highs, they will defend the first time back in. And they did. They just quit. You know? They just quit. So he tried it here. We both tried it here. Neither of them worked. And that's, I think he got some risk off here. He took profit a little earlier than I did. and got some risk off here. I just took a step, you know. But it's you have to be okay with taking stops sometimes if you're going to trade. That's just the way it goes. They're not all going to work. But in that case, I saw this. The reason I didn't take it is because it wasn't in the location I wanted, right? I wanted it to be up here. Even though it was on the point of control, what I wanted was this. I wanted to set up here, or to sit around here for a while and then roll over, right? I didn't want to aggressively attack it in the middle of the channel when it looks like bullish momentum. That didn't work for me. So I'm just not that aggressive. Oops, I'm trying to delete that. There we go. So once we trade above this level, that trade idea is invalid. So you no longer even care about this green line. And in my opinion, we should be bullish here. In fact, I think being bullish right here is okay, because when this one doesn't work, this one does a lot. And again, it's something I didn't do, but I like. Is to think about the fact that when really good trades that work often, when they fail, the other team is probably winning. Right? So if you get purple bar star, even though it's in the middle of the channel here, this is when it's okay to take it here. Because see, look at momentum, right? It's not down, it's up. So this one's okay, this one's not. And I knew this one wasn't, so I should have taken this. And so here's where the higher time frame could have helped me, and I just was distracted by the fact that I just took a stop. But if you look at the higher time frame here, I know there's a lot of extra signals, a lot that I don't need, that I'm just testing out. But once you get these lows here being respected, and once you get this guy trapped with a algo going the opposite direction, like this, see, so you made a higher low, you trapped a seller, and you had aggressive buyers. Once that prints, which happened at, let's say, 12,900, we don't want to be bearish, in my opinion. So once we got to 12,900, which happened, like I said, right here, on this push up, once that happened and this failed, I don't think there's any reason to short this, and I think you can long this. I did short that because I didn't think about it, but in retrospect, in fact, it might have actually, it occurred earlier. It occurred here at 900. It occurred here. So this short is probably questionable, and it makes this long that worked out that I missed make more sense. And it also makes more sense why this stop happened, right? And then explains why this one worked. Doesn't explain why that one worked, but sometimes they work even when you don't expect them to. It does explain why this and this failed, right? So when the higher time frame has, like, and if you think it's like participants from a higher time frame, those who are willing to bet more because they have a bigger account and more risk, less risk aversion, more willing to take some higher level risk. If they're showing up here after these aggressive buyers, you're gonna get higher prices as long as you don't get underneath this. So, but you can see even when they just look, there's no aggressive seller here, right? But there's an aggressive buyer. So just that alone is strong. But since there was no aggressive seller trapped, you don't get an immediate lift. You get a retest. And then the defense. So that's this. It's the same exact thing in reverse. It's this guy selling and then defending it here or here. That's all this is. It's this guy buying and then defending the same position, basically. They put in aggression here. The green is absorption. They're absorbing sellers. So this is the pattern you want. You want the star. You want the star to get tested below, and you want them to come back with a green bar, and you want this bar to be purple, or this bar to be purple, or this bar to be purple, right? Like you want some purple bars on the way down. You want a sign of aggression. You want them to test that aggression, and you want them to bounce. This is as good as it gets, right? Even better when you have a triangle down here, and way better when you have a star. If this is a star, you don't even get this most of the time. And if this is a star, it's gone. But see how, since there's no star here, and no orange bar, no sign of sellers being really aggressive, you had some FOMO sellers here. You had the arrow and the triangle. So somebody FOMO down there, but it's on low volume, and it mostly dropped because buyers pulled their orders. It's purple, right? So they do come back and they test this out because no one's really trapped. This one doesn't get tested once you break. Yes, it got tested on the very next bar, but once you close above it, they never get there, right? Like, will they someday get there? Like, yeah. But this is all I care about, right? If I can catch this, I'm happy. Because this is from 12,900 to 1,300. That's 100 fucking points. Like, if I'm just not shorting in this, I'm fine. That's the way I think about it. I don't have to be long the whole time. That's not realistic for my trading style. But I'm definitely going to not short aggressively when I see this. Right? So once this happens, I should not be shorting this, which I knew. I think the short that happens up here is probably fine because it's so far away you get mean reversion. And I should be taking every long. So this one, far enough away, it's okay. It's a long, take it. This one, not a good short, right? Very risky in the middle of the channel, not far away from the action, right in the middle of the action, right? It's like at the high volume node, don't do it. And then this one is still inside. See how this is outside of this? We got over the orange one, and the orange is over this one. These little flags, the sideways, the little pivots, here, the purple, here, they're getting higher and higher. These are better shorts than this. And even though there is a purple flag here, a triangle or whatever, sideways triangle, it didn't break this one, right? It's getting above that. Shorts up there will be okay. But longs anywhere should be okay. And that's the adjustment I need to make. Because I need to be more willing, because I saw this long set up, and I saw this. Like, I looked right at it, right? And I bought calls back there, but I didn't buy ES or NQ. Like, I knew that I'm supposed to be long, and I knew I could buy calls here, which I did, and I still have. But I didn't think of the fact that this is a signal to get long, and the momentum is probably higher. So anything in this range is good to go. And you'll see if we dip into that range, it's probably going to get bought. And so I can, this one, like, it's an okay short because it got above this, right? So that one's okay. But look, they put in a heavy aggressive buyer. They stop out this guy, and they put in another one. This is a very good short, right? But then purple bar, star. So I think you have to cover your short and get long again. We did not get into this zone. Okay, they broke above. They broke above the most recent flag, which is here. That's that red line. We also broke above an old red line. Someone who is, oh, or is this just my own line? Nope, that's another, like an earlier, yesterday's high, a high from yesterday, a pivot high somewhere. So once they break over that one, this is a good short. It's also divergent. That's a good short. This, now, even though there's no purple bar over here, this is now a good long because of the location. And I like, that's just something I'm going to have to get used to. This has to be okay. Thankfully, it had the POC under here, but I don't even think it matters. I think I can actually just buy this as long as we're still in this, as long as this area is still being held, and as long as like really aggressive buyers aren't getting trapped at the very highs. Like this guy technically got traded under, but look where we're testing. If you draw a line here, we are trying to, oh, I don't need the number. We're trying to reclaim this. See that? We're trying to reclaim that level. And that level, they got aggressive at. So if we can reclaim it, probably gonna squeeze. Right? It takes them 2 tries. That makes sense. I actually think that this is probably an okay long. And this is definitely a bad short. Right? Because it's still bullish. sorry. So here, orange bar, green bar is usually pretty good if it's bullish. So usually I'd say that's actually an okay long. We're awfully close to the top of the channel here, and we're really getting pretty close to resistance. Risk reward isn't very good, but the setup is strong. And then they try to reverse it on a purple bar. It's got lots of aggression, but it's a purple bar. So I would probably wait, and then they come right back at it with a star and they trap them, right? So once again, like if you bought this, you have to buy this. I'd personally just buy a dip, but I don't know if you get it. Yeah, there. That's what you want. This is the long, right? Because now you've confirmed that this guy's trapped. It's the exact same setup as this. Star, pullback, green. See it? Star, pullback, green. That is like the shit right there. It's the same thing as pink, pullback, orange. This pink star. Oh, where's the pink star? That's the wrong star. I'll find it. The other way, it's pink. Okay. Yeah, it's almost there. Pink bar, star, yellow star, and you can have a pink diamond, and then it comes back with an orange bar. I shorted that and I took the loss, right? Because it works a lot. These are just kind of far apart, and the problem is that they trapped the short here, and that's why this didn't work. They traded back into that range, and he covered, which is what makes that such a good long. So anyway, like I said, in retrospect, it seems really obvious. In the moment, they're pretty tough to like. You have to decide ahead of time which ones you're going to take and which ones you aren't before they print. You don't have time after you see it to say like, oh, is that a long for me? Like, no, you need to know, right? And like I said, I think this one's okay, and this one, like, I have to take every time. I had an execution error here, which was very frustrating, but I recovered from it. I knew it was a really good trade, so I put in 1.5 size when we were here. I was like, okay, if this bounces, especially if it trades below it, which it does, and it bounces and gives me another algo, especially a green bar, I'm going to buy it with 1.5 times the size. So I was all prepared. It got here, it printed, I hit buy, and it gave me an error because while I adjusted the size of the entry on my on the Ninja, I didn't adjust my brackets, and my brackets were set up with like less like just to put out less orders. And so, and it gave me an error because it was like, you're telling me to have a stop loss on like 5, and you actually are on 5 orders, and you're trying to buy 8 of them, right? So it's like, nothing happened, right? And I just got an error message, which was super frustrating. And what I should have done, in retrospect, is see that it doesn't matter. I can get long still. You know, just because I made a mistake on execution error, it bounced up like this, and I got anxious, and I was like, okay, I missed it, whatever, let's just see if I get another entry. And I technically did right here. It did come back, and I saw it happen, and I didn't click the button, right? Like I hesitated there, and I was like, I'll let's see if I can go just a little bit lower. Like I started to second guess myself just because I was thrown off by that, and it just never came back. Which is fine, but frustrating. But this is when I was like, you know what? I still have calls. I'm still able to take advantage of the move. I'm doing okay. My day's fine. Like, and I read it right, and the edge is confirmed. I know the setup is perfect, right? I just got the execution error, and I hesitated when it pulled back into it. Should have taken it, definitely. Should have at least taken it with my regular size. But I'm not going to let that throw me off. I'm not going to fight this move. I'm going to take a break. I'm going to come back, and I'm going to just trade good because I'm making good decisions. You know, there's no reason to stop trading just because I made a mental error. The decisions are good, and my P&L's fine. So when I saw this, I did not short it, although it was very, very tempting to. But after a move like this, I do not aggressively fight them. It's like if you look at the 80 tick, it's really, you don't fight that, right? Just don't do it. The angle's too steep. What you need is someone trapped. So once you get pink bar triangle up, okay, now if it starts turning around, you can start getting shorts, right? See how there's no signal here? So there's no short. They do get the triangle, but by itself, that's not good enough, especially inside of the bar of the channel here. Then you get another long signal. This is, and I did not trust this. We were way too high without any pullback. But I kind of like it, honestly, in retrospect. The problem is that we're so close to resistance. The voodoo range level is right here. That's the problem. And so we get above the voodoo range level, and we come back with a purple and orange bar outside of the channel, and I think that's an okay short, actually. It's starting. See how the angle is slowing down? I think that's fine to short that. Don't think there's anything wrong with it. It just doesn't work. Now we get another pink bar with a triangle up, and this time we potentially trapped a star. So if we can get under this and get a signal, it's a good short, right? They print another star and they just turn it around with no algo. So I'm sure you can hopefully can kind of see that it can be pretty frustrating having rules, right? Like all of a sudden I'm missing this whatever it was, like a 40, 50 up move, and then I'm trying to be patient. I'm saying I can't short unless the algo says it's okay. I actually got a short signal, this one, that stopped, right? And then it looks like it's about to turn around without triggering me. And then I look at the 80 tick and I see that we have potentially a pretty big drop coming. And you can get, I got a little frustrated, right? It just didn't trigger on this time frame, and that's going to happen. Sometimes you're just not going to get it. Now, thankfully, I knew that we were mostly bullish, right? I knew that I'm not going to suddenly get super bearish here. I know that this level down here is still good. So what I want to do is I want to do the exact same thing. See that this one, right, came out of this apex. This level here came out, sorry, it's this apex. This apex and this triangle is what produces this level. It also had a voodoo range level on it, right? I knew that that pullback was good, right? And even this is still okay. But now that we've put in that extra level, we can move this to here. Okay. You could technically move it to here, but it's pretty dangerous. But it doesn't set up anyway, so it's fine. But let's put it here, and we'll say if we get a pullback into here followed by a sign of some aggression, it's probably a pretty good time to buy, right? And so we get the first one here. Now this one, we are going steep, and I knew to avoid it because we had the diamond. So what I want now is one more pullback and then a long signal. And there it is. That's my signal. So the diamond said wait because it's too steep, right? Normally outside here is good, but if it's steep like this, you treat it like it's inside. Or just take everyone and just accept that they're going to stop more often than otherwise. But if you see this kind of volume build and this just like steep drop underneath support, I just skip the first entry. That's really the easiest way to say it. I just skip it. I treat it as if it's right in here because I know that this channel is dropping fast and these levels are not very reliable at the moment. And the best I can expect is the mid. But the idea, the mean reversion concept that most of the trading will happen inside of here, it does not work when you got this most momentum. It just doesn't work. You end up just like staying outside of it. So I will just skip this and I will usually wait for the next entry or the first power bar. So I'm fine taking this, especially with the triangle down. I don't think that's wrong, but this is actually the most aggressive I will trade here. And I took that and got paid. It's the point of this is to get to the midpoint. That's it. Then this is pink bar star, so this was a short, right? And that made my day basically. Like that's all I needed. And that's the thing. I got so frustrated over missing this and this that usually I will miss this. But today I knew that was the point, was to be as productive as possible and get out of the market. So took that, and then we actually caught this one, and we took this too. So Simon called this out in the room. The diamond is way below the channel, and see how we've already made a power bar. We have an apex here that came back up to the midpoint. So this is no longer heavy down rotate, like down momentum. It's still bearish, and our target should still be the midpoint. But now that we've created a pivot, this one often comes back to that pivot. So we should expect trade at least back to here, which will probably be the midpoint. So we took that, and it just went further than I thought it would. I did take some profit here, and then I took the rest. I took most off at the voodoo range level, 12,952. I held a runner till this candle, this bar, and I actually exited on the very next bar in the range of this one. I didn't even wait for this to print. As soon as I saw the star down, I was just, and it's a lower high than this, and the fact that they put in a star right below it, or before it, going the other direction, I know if they continue here, it's going to go lower. So as soon as I saw this bar, and they closed here, when they started coming up, I just exited, and I was done for the day. Because I was green, and like I said, even though I missed these big moves, my decision making was good. So, but yeah, you can see that level, sorry, I just erased it. That level here worked pretty good. I drew it wrong the first time. It's up to the point of control of the triangle, right there. So it's from the low to the point of control of the triangle. You could do it to the open of the triangle, but I usually do it to the point of control. And so that is your target to enter. So if you're still bullish, when it comes back down, your like where you want to see aggression is there. I don't leave a limit order there. I don't get long there. I get long here. Make that perfectly clear. I'm not just sitting with a limit order down there. But if I see a reaction to this level, I treat it like a voodoo range level, basically. So yeah, it did get give us some. Where was it? We were here. So this one I think is fine. This one is really good. Right. I was done for the day. Biden was set to speak, so I wasn't going to take this trade, but you can see that once again we've got purple bar star touching the blue line, but not under it. So not perfect, but an aggressive buy if you think it's still bullish. It's still in this zone. See that? We're still in there. So it's not a bad location. Oh, I missed this. It's got a diamond on it. I just missed it. You know, thankfully, I wasn't trading it and missed it. But that blue diamond means as long as it's inside of the channel, means we should wait for the next one. This is what you want. Now, when the diamond is the second one, it's fine. That's kind of confusing. But that first diamond, if it's inside the channel, or if it's coming right off of really heavy lows, we just skip that first one and take the next one. This one's okay because it's totally outside, and there's been a power bar, a pivot since momentum switched. So this one's fine. This one is back inside the channel, so we wait again. We wait for the next one. This one's fine. It's the second one. So that's okay. And that rule has worked pretty well so far. I do not know if that's going to continue to work. That is one of those patterns that could change dramatically when speed changes. But currently, that is the pattern that I've been having success with, is wait for that first sign of aggression, and then if they come back, and really what you want it to be in the same general area. This is perfect. Like this one is not the second. This is. See how it's in here? Let me take out all this stuff. So if you see one of these diamonds and you mark off the range, and then you see another sign of aggression in that range, that's the buy, right? This one. And then so this diamond's outside that when you just buy. Like that's always a buy no matter what algo it is. Because of the location. And then when you see this one, you put the marker there, and then a sign of aggression inside of there is a buy. And so even though that's a diamond and it's inside, it's okay because it's coming back and it stopped out this diamond and it came right back in again. Because again, these diamonds are just showing volume being like spiky. So this big spike in volume, that's what it's identifying. And then we also had a sign of aggression here. But the volume itself just basically means a lot of people are buying this, and so they're gonna fuck with it, just like a high volume node. They're gonna shake it around. They're gonna probably roll under a low, but then when they come back, this is the real one. You know, the fact that they came back on it. The reason the trade works in both these cases, it has nothing to do really with this. It's that even though we put in high volume and traded below it, buyers still didn't give up. That's the trade, right? So once you see this, as long as we wait until they take it out and buyers still show up, that's the entry that's associated with this bar, right? This diamond no longer really matters because we've already seen the pattern. It's just the fact they brought it back into that range right away. The diamond just means there's volume there. So if it did it again, I'd technically have to try a third time. But usually lately it's been this second one, to the downside too. But so here, this is just a sign of aggression at the blue line. If you think it's bearish because of this and this, then you have to take this. But there is no pink bar, and I don't think it's bearish personally. Then we get the pink bar with the triangle up followed by star down. That's usually a really good trade. This one had the diamond, and the POC was inside of the pink bar, was inside of the channel. So I didn't take the short. I wanted to see it. I wanted to see this in reverse, right? I wanted him to get behind it and then show another sign of aggression, and they just didn't get behind it. They did show another sign of aggression though. So what I may need to adjust is I may need to physically mark this off, and rather than saying it needs to be traded behind, it may just be if I get a sign of aggression in that zone, in that price range, I should take it, because that would have made a lot of sense. Like, I like the trade, I didn't have a rule to get me in, and to keep me consistent, I only trade when I have a rule that says I can get in. If I see something like this happen over and over again, where I'm like, God, I keep missing these trades and it never quite sets up right for me, well, then maybe it's time to take a look at your plan and adjust the setup, right? But I'm not going to do that on the fly. That's why I do these reviews. And so I can see, oh, okay, maybe I don't have to wait for it to get back here. In certain scenarios, it actually just continues with another sign of aggression from the range. So then I'd have to go back and say, well, how often does that occur? Well, what about this one? Well, look at that, right? Like this one, technically, came back into the range. Come here. And it fired off again. Now this one stopped out, but you'd have to put your stop down here, right? Because this is the bar that the setup is based off of. This is the signs of aggression out of it. So they try once, it comes back, they try again, but if your stop's down here, it don't matter, right? But the way what I would think that might work is you wait for this one to print, and then you basically just buy any dip, right? So you'd probably get long in here, and you put your stop down here. Because as long as you're getting long in this area, then you don't have a big stop. The problem with buying this is that's a 2-bar stop. That's pretty big. But if I can wait till it gets back to the high of this bar, that's pretty good. And you can see this one, it did come back to the high of that bar. See that? Clearly. Clearly did. But not after this sign of aggression. It didn't quite make it back over here. So you'd have to decide what the best way to do it is. Because the only way to really get this short, in my opinion, unless you just bought it coming back, is to short it here, and then you have a 2-bar stop. That's the problem. And at the end of the day, I'm not going to do that. I'm not going to give away 2 stops, right? Like 2R. I'm not going to give away 2R for like a 1-to-1 trade. But anyway, so that's something I'll keep looking at and see if I want to adjust that. We come all the way down to here, and we put in a star above this range. Pretty sure that this range is no longer valid once it's bounced. But we have this one, right? So technically, we're going to use the same exact setup. Technically, that is a sign of aggression, that star coming up off the bottom. So the question is do we get a pullback to this rectangle? Right there, I guess. But it kind of did it already. It kind of already went, right? So that's the question, like when can I take it? And that's why I've been waiting for a sign of aggression. So let's see, do we have a sign of aggression? Oh, well, that's when you take it, right there. That's when you take it, I bet. It does have a diamond, though. It does have a diamond, and it's inside of the channel. Let's see. Aha! Look at that. Cool. Okay, so when the diamond bar is the trigger and not the signal, just like here it's the trigger, here it's the trigger, looks like it's okay. Oh, and then I wonder if this is a trigger. Hold on. Could it be? Oops, that's the wrong tool. Could it be that this was a trigger from an earlier trade? We're looking for a pink diamond in that area. I don't think so. I don't think you'd be able to go back this far. Okay, so not this time. Obviously, there's more ways to get reversals than just one, but I was just curious. Okay, so that's something I will watch for sure. Oh, and that's the end. All right, that's the end of the day. Makes sense. So, but yeah, that looks, just drawing out the bars, the range of the bars of these diamonds, these high volume. And I mean, anybody can, you just look for bars with high volume. Like this one's post market. I don't know if I really trust that. I think it's getting triggered because there was so little volume, like all of a sudden. Like I said, I don't know exactly what the parameters are, but I'm kind of thinking that this one might not be that useful because if you look, it's like it's a big bar compared to these, but like it probably is getting influenced by the fact that average volume is so high. So like the exponential drop here probably makes this diamond easier to print. But I don't know for sure. I'm just guessing. But like down here you can see like it's clearly bigger than the last couple, right? And this one is this. Clearly bigger than the last few bars and clearly bigger than the average, right? So you don't have to know the exact formula to sort of understand the concept. But I think what's neat is that at least right now when the market is slow and kind of grindy in the summer, I may be able to decrease my stops by marking off these ranges and then longing off of them later on and just keeping my stop down here. And if I don't want to do that with futures, I can try it with calls. Like I said, that's what I did for this because the momentum trades, trading with futures is really hard. And then when the momentum sets up on the 80 tick, that'd be like a 40-point stop. So I didn't want to take that with futures. But like, it's a good trade, right? That's a valid entry on the 24, which is why I can take it. But the fact that it sets up so beautifully perfect with a trapped star and a speed bar coming off of it the other direction on the 80 tick makes me think not only are we going to go somewhere here for a scalp, but this low might actually be a place that we want to get long in the higher time frame, right? Which is what I did. Now I didn't buy it right away. I waited until we like pulled back. Like I bought it in here somewhere. It was in the first 30-minute. It must have been like right in here is where I actually bought the calls, but the confirmation happens like right there at 900. Once we reach, okay, so it confirms up here. I didn't buy them immediately. I waited and bought them in here because I figured it's high, like it's the beginning of the day. It's a high volume node. We're gonna keep trading back and forth in there. There's no reason to buy the breakout. I'm not gonna buy this, but I'm okay buying this with calls and then putting my stop down here and just leaving it. When you get enough momentum, I could have taken profits up here. It would have made sense to take profits. I just figured let's just swing it because it's a small position and we didn't seem to be putting any pressure on it. So I'm just going to swing it and see what happens. It's a small position and it's for gaining information for whether or not I can apply some of these same concepts on the higher time frame to trading calls. So does anyone have any questions? Otherwise I'm going to wrap up. This has been an hour. Hopefully it's been useful use of your time. I always enjoy these reviews and it makes me process it more if I have to talk out loud, so I appreciate having an audience. But if there's no questions, we will wrap it up. So let me know. Like I mean, pretty much anything. I'll share whatever I can. I don't have rights to tell you how to build the trade and perform algo signals. Nor do I have access to the actual alerts, but like how to code them. But I think it's important to understand a process conceptually before you will be able to trust it. So you need to know, quote unquote, how it works. You don't need to know how to build it, right? But yeah, if there's no questions, let's wrap it up. Thanks again, guys. I will see you next time. Like I said, unless there's some dying questions. I'm going to leave this up, by the way. If anybody wants to watch the review. I will leave it on YouTube for. I'm gonna try to leave these up for at least 2 or 3 days before I take them down and replace them with the new ones. If I have too many up there, and like nobody sees the new ones, they fall behind. So I will keep it up there if you want to watch this review again, or watch it on faster speed or whatever if you were zoned out or multitasking, which I am not offended by at all. Like I said, I did these for my own good, and if it's helpful for you guys as well, cool. If you have any questions about the algo or my process or anything, you can always DM me on Twitter at RedBenTrader, or you can message me at my Discord. We can work in there. Otherwise, if you're in the Trade and Perform room, I'm always keep my eye out there, so you can always ask questions there too. All right, thanks guys. I will see you next time.